Mr. Gartside, I want to begin with you and talk about that flattening of the Treasury curve and whether that's something that you anticipate is going to continue in the months and potentially year to come.
Very much so. So when you look at flattening, a very, very pronounced trend, as you look into next year, our expectation at least is the Fed probably move 4 times. So as you look in 2018, you could see a fairly dramatic flattening just as we've seen this year.
Nick, are we going to be dead flat? Because if we get 4 hikes next year, we're approaching 2.5% on the policy rate. I can only imagine where the rest of the curve will be if we get to 2.5% on the policy rate.
Well, dead flat's probably an exaggeration, but certainly a fair bit flatter, because I think that the other thing we could well see next year actually is inflation starting to tick up. If you think in a US context, one of the factors that will be pronounced is the impact of the weaker dollar. There's also evidence in the US of tentative evidence of wage inflation. So you add all that together, a little bit of an inflationary impulse should also push the back end up a little also. Lisa
Brammitz, are we going to go into next year with inflation forces reasserting themselves? Is that going to be the pain trade, anyone that's long duration?
I'm still here stunned that 4 rate hikes next year is the consensus.
You don't think we get it?
Well, right now the market is not pricing it in.
It's certainly not the consensus in the market, that's for sure.
But you're hearing JPMorgan, Deutsche Bank, you're hearing a whole host of investors saying that they're seeing 4 hikes because of the tax plan and because of inflation. We haven't seen inflation since the credit crisis in a massive way, and yet people think now is different. This is a big question. Also, Jeff Gundlach, in a webcast yesterday afternoon, said that he expects that 10-year Treasury yields could end up at 5 to 6% by within the next 4 years. What does that do to the S&P 500? What does that do to riskier assets?
Biggie Charter says it's positive. He said it's going to be positive. The best year that we've had for quite a while was 2013 when we had the taper tantrum and stocks pushed higher.
I'm just trying to square this logic. Yeah. Everybody was worried about rapidly rising interest rates. Now that possibility is much more realistic and people are saying it's positive. I'm just having a hard time with this.
Paul Richards?
I'm totally in Lisa's camp here.
Yeah.
The last time the market was in the camp of 4 hikes was when they thought the Fed was going to go. We got 2. So at the end of the day, the Fed is telling you they're going to give you 3 next year. And it's going to take a lot for them to move. And the thing is, we've already got enough growth going on. There's enough animal spirits. It's going to take something dramatic in terms of growth to get us 4. And I think the market's prospectively getting a little ahead of itself, particularly on optimism around this tax deal. So I just think the market's just too ahead of itself. Stick to 3. Just take a big breath.